how green title can kind of help you guys as you're with Better Homes and Gardens, and kind of how that relationship kind of exists. Hey, Jackie.
Hi. Sorry.
Hey, no problem. I'm just getting started here. So, and then
this is Nate Jaeger with Green Title. He's literally saying his first words. So we're just getting started.
Sounds good. And then I wanted to go through kind of a little bit more in depth of kind of some different policies that are with title insurance, and kind of some questions that you guys probably field from your clients. And then I wanted to go over a few things like I see within real estate transactions of maybe either common mistakes I see that real estate agents make, or just kind of some general good practice to help you and your client kind of navigate purchase agreements and closings and whatnot. So first off, I'm going to just talk about like what the role is of a title insurance company. So specific to our company, Green Title and Better Homes and Gardens, so we are a title insurance and escrow services provider, meaning we provide title insurance as part of a real estate transaction, and the escrow designation is we actually handle all of the funds for everybody involved. So we handle buyer funds, lender funds, seller proceeds, and we prepare closing statements. And so that is the escrow piece of it. Within Green Title and Escrow, so kind of how that works is when agents get a purchase agreement put together, so that's all through .loop. Agents will share their contracts with Green Title, and once we get that, that would be a new order for us, and so we would ultimately create our file to get it going. So how that looks is once we get our file, we're sending kind of some automated communication pieces to the buyer's agent, the seller's agent, the lender, just kind of letting everybody know that we received the file. We are processing earnest deposits, so we are then sending out receipts for those earnest deposits. And then customarily, pretty much with every title company, kind of some services that we provide is within a purchase agreement, if there is like a termite inspection that would need ordered or a survey that would need ordered as part of the purchase agreement, we are handling that piece for agents. So as far as like home inspections and stuff, that's something that's totally separate. But like termite inspections, plot plans, we're getting those ordered. Once that's kind of entered and completed, then our next step is we work towards the closing date. So we take that purchase agreement and we make sure that we're executing the terms of that purchase agreement. On the back end, we are doing a title search and producing a title commitment, which is going to make sure who our sellers are. We make sure we have everything right on the buyer side. And we are ensuring the transaction for the purchaser to make sure that they have a claim title. Along with that, we're also working with the buyer's lender involved during that process to prepare closing statements, get everything final balanced, and making sure that all the funds are accounted for. And then we meet on a designated closing date that is designated by the terms of the purchase agreement. And at that point, we're meeting with the buyers, the lender, to get everything closed. We also meet with sellers too as well. Typically their closing is handled probably a week to 2 weeks prior to the actual closing date. So when the sellers sign their paperwork, which is referred to as a deed set, that usually happens prior to the close date. Once they sign, then those documents are held in escrow until the buyer's scheduled closing date. At that time, we can get closed with the buyer. We take the buyer's funds to close, and in return, the seller has authorized us to provide the deed to them. We don't actually provide the deed to them. We just record the deed, which conveys the property to them. And then on the back end, we're providing proceeds to the seller. And then after that, that's kind of a completed closing. So I don't know if anybody has any questions in regards to that. I don't know necessarily how new agents you are as far as as if you've had closings in the past or you're just new to the company. But
I'll chime in for everybody. Sarah is brand new, and she's the newest one here. And both Jackie, Julia, and Hannah have now been around for a few months, but are still all very, very green. Pun intended.
Gotcha. Yeah. So I don't know if you guys have had a closing or one or two or a couple, or even if there's any questions there that you guys have had or run across in the past that you would want more clarification on.
I have not had it. Oh, sorry, I'm on background. Okay. I have not had any, but I just had a quick question. So you said that you guys handle the scheduling the termite inspection, but who still pays for that? Who pays for that?
Yeah, so within the purchase agreement terms, it'll kind of dictate who is to pay for that. So it's customary for the buyer to pay for the termite inspection, unless the buyer is taking out a VA loan. And in that case, the seller is to pay for that. And that is actually kind of all within that purchase agreement paragraph in regards to that termite inspection. But the payment for that is made part of the closing statement. And so that's all calculated in the final amount that the buyer would have to bring to closing. So that wouldn't be something the buyer would have to like prepay. Okay. Typically, when files, let's say, just say, for example, when files were to fall through or cancel, a lot of times termite companies would actually waive their inspection fee. But these new purchase agreements that were put together here over the start of the year, sometimes it actually authorizes payment for those to come out of the buyer's earnest deposit. But we haven't quite seen too much of that. A lot of times termite companies will just end up waiving that inspection fee. But, there's also that paragraph within the plot plan and the survey. So there's a couple different survey options that buyers can choose from. A lot of times we don't see surveys or plot plans being done as part of a real estate transaction, but sometimes you guys may get a buyer that wants a survey or a plot plan. And so there's two options for that. A plot plan is typically around $100, and that's when the survey company will just kind of basically draw the improvements on a page and give estimated dimensions of the lot. The actual survey piece is where they would go out to the property, do the final measurements, stake the pins, and that can be like around $500. And so that process could take anywhere from 2 to 3 weeks for a survey company to do that. So if you guys ever run across a transaction in which the buyer is requesting a survey, you can reach out to us as the title company to just kind of field some questions and get an understanding of what they're maybe needing, and then give you the kind of the process of what it would take to get either survey done. So a lot of times survey companies, if they do the actual survey, it's called it's like the second option on the contract. I think they refer to it as improvement location survey. That's typically like $500 usually, around that. So, and a lot of times the survey company will require payment before closing on that actually. So, so that's kind of the role of the title company. I always like to say that us as the title company, we are here as a resource for you guys. So we've kind of seen everything come through us. And so if you have questions on stuff, whether it be from a purchase agreement to maybe have just issues with sellers or buyers, you can use us as a resource because we've kind of worked through everything that kind of seems to have happened in real estate. So use us definitely as a resource to help you guys out and navigate that stuff. From a title insurance perspective, so what I want to get into is kind of what exactly is title insurance. And there's some things within title insurance that you guys probably get questions on from clients as you kind of move forward. So what we do as a title company is it's called title insurance. However, it's kind of different than most insurance policies that you think of, like a homeowner's insurance policy or a car insurance policy, in the fact that the premium for title insurance is only a one-time premium. So when we close on a real estate transaction, title insurance is paid only once. homeowners insurance, car insurance, people pay that year after year after year. The title insurance premium is just a one-time insurance premium that is paid at the time of closing. And then that covers for the existence of the policy. It's the insurance piece of it is I think it's kind of misleading, because when people think of insurance, they think of something that, they may not need or that they have to purchase, but they don't really want to purchase. I almost like to think of it as it's a title guarantee. So when you're buying a property or buying real estate, what a title insurance company is doing is they're making sure that that purchaser is going to own that property free and clear of any outstanding interests, and that their rights in that property will be protected for as long as they own it. Now, to do that, they pay a title company to provide that service, and that's what the title company calls, the insurance premium that they have to pay. But essentially, a title company is doing the work, preparing all the legal documents, and then they're guaranteeing that they own that property forever. And so when we get a purchase agreement, kind of the simplest thing that title insurance companies can do, which maybe real estate agents don't think about, is that it's simply comes down to, okay, a buyer and a seller went into contract. Does the seller who signed that purchase agreement, do they have the right and ownership to sell that property to that buyer? Or did all of the ownership interest as a seller sign that purchase agreement to convey that property to the buyer? And so there are many times where we run into real estate transactions where, not all owners of a property sign a purchase agreement, or there's missing signatures from owners of a purchase agreement. So that underwriting piece simply is kind of a big key to make sure that all interested parties of the owners of the real estate kind of are accounted for. So when we get that executed purchase agreement, we're making sure everybody has signed that, sellers and buyers. And then on the back end, we actually go through the public record. So with any sort of real estate transaction or ownership, everything is recorded in the public record with a register of deeds. And so each county has a register of deeds. And so we go through all of the records pertaining to that particular property. So we go back from when the property transferred from ownership to ownership to ownership. And we make sure during that time period, everybody who owned that property and sold that property had their interests removed. And so when we go through that, we issue what is called a title commitment. And so that's what we send out to agents, buyers, sellers, once that's completed. And, we could do like a whole nother class on just how to read a title commitment. And so if you guys ever have questions on when that comes through, call us and talk to us about it, because we would go through pretty much everything, what it means, how it affects your client, all of that, because it is kind of a confusing document to read. But essentially that commitment is telling us everything that is affected with the property, who the owners of the property are, and then also what needs to be done in order to transfer title to that purchaser free and clear so that they don't have any issues going forward. So once that's completed, on the back end, Green Title, we're mostly working with the sellers involved in the transaction, as we have to clear up any items that they need to clear up in order to have a free and clear title to the buyer. As part of a title insurance policy, we're insuring basically two people involved in a transaction. So we have two policies that we issue. One is an owner's title insurance policy, and then the other is a lender's title insurance policy if there's a lender involved in the transaction. So what the owner's policy is doing, that is protecting the buyer. So that is the policy that we give them, insuring their title. If there is a lender involved in the transaction, that lender is going to be using that property as their collateral for the loan. And so we provide them with a lender's policy ensuring that their loan against the property is going to be in first lien position and there's no other outstanding interest in the property that would affect the loan. The main thing with a lender, they're using the house as collateral. So their main goal with that is if somehow the borrower were to default on that loan, the bank would have to try to foreclose and take that property back. So if they had to try and foreclose, that lender's policy is ensuring that there won't have any issues basically in foreclosing on the property and getting it back. So that's the policy that we provide to the lender. Does anybody have any questions on that piece of it? Yeah, Sarah.
I do, Nate. Okay,
Yep.
So I'm going to use some terms I was thinking of that I've just learned of, in my courses. So if there's a cloud on the title, so then what happens if it has to go to court? Like some of the stuff I had learned about in some of my coursework sounded like sometimes it would have to be filed with a court. Would Green Title handle that, or does it go back to the seller and they have to do something with a lawyer or court?
Yeah. So real estate's kind of an interesting piece is there's all kinds of interests that affect real estate when people own it. So it could be, like a bank has a lien against it. Maybe our seller has a court case in which they have a judgment against them. So by law, that also affects assets they own, which could be the real estate. Sometimes there is a person that owned the property who passed away. And so now there's estate situations or heirs involved that have interests. So there's so many things that we underwrite that affect real property that we make sure are not there. Now, as a title company, we are not necessarily a law firm, so we do not provide any sort of legal services. When we write title insurance policies, we write them through an underwriter, which so we're kind of like an agent, and then we write policies through our underwriter. As part of that, with the underwriter helping us out, we can prepare some of the legal documents like the deeds and stuff. But if we get a situation where there's legal services above and beyond that, then kind of to answer your question is at that point, the seller kind of has an issue with their title. Per the purchase agreement, they're stating that they're gonna sell that property to that buyer free and clear of any title issues. And so if there's title defects or clouds on title that they have to cure, basically, that would provide legal help. At that point they would have to consult with an attorney to help resolve some of that stuff.
Okay, thank you.
Yeah.
Do you guys have a local underwriter?
So there are probably, I don't know how many underwriters there are. And they're all kind of national underwriters.
Okay.
So I would say there's probably 3 or 4 main kind of big underwriters, and there's some other ones that are kind of smaller. So Green Title, we write our policies through Fidelity, which Fidelity is the biggest title insurer in the country. They have all these different underwriters under their umbrella. And so typically with any title company here in Omaha, basically a lot of times they're using kind of the same underwriters kind of over and over because there's only a select few title insurance underwriters that are out there.
Okay. Thank you.
Yeah.
I also have another question. It might be uneducated. Okay, so when a lender, for example, gives the cost and fees sheet to a buyer, do they have the title is title insurance an automatic? And if they were going to go through Green Title, is it a conversation between the lender and you to figure out that price point for the cost sheet? How does that work?
Yeah, so that's a good question. So when it was probably 5 or 6 years ago, after kind of the financial crisis hit, the government actually came in and they required lenders to provide disclosure information to clients within a certain time period. And so once that was kind of installed, what lenders are required to do now, so once once a lender gets like a purchase agreement accepted and they're going to be providing the financing, that lender has to disclose certain fees and costs within a specific time period. And usually it's pretty quick. It's usually right at the beginning. And so when they have that purchase agreement and they know who the title company is, a lot of times that loan officer or that lender, they're reaching out to that title company to provide an estimate on what those fees are going to be for the transaction. And so we provide that to the lender, and then in return, the lender, they will take our fees, they will add them with their fees, and then they'll provide that preliminary like cost sheet or closing statement that they have to disclose to the borrower. I'm sure they probably provide that same one to the lender or to you guys as agents as well. But yeah, we kind of work hand in hand at that point to provide like our fees. And the good thing with title insurance companies, like the title insurance premium, that is regulated by the state of Nebraska. So from title company to title company, the title insurance premium, they're all usually about the same. So the one thing that can change is an escrow closing fee. And from title company to title company, that can be somewhat different, but usually it's kind of around like $500. That's what our escrow closing fee is at Green Title. And that's probably, I mean, that's right in line with kind of other title companies that are in the
I
area.
have a quick question. So we can use your app though to determine the fees just for your portion, the closing or the work that you guys do essentially, right?
Right, correct. Okay. Yep. Yep. And so I can, if you guys don't have our app, I can send you guys the link to download that. And it's actually a pretty cool app. There's a lot of different calculators and stuff on there. But the one piece with Green Title fees, it's just a specific portion where you guys can get our fees for the title insurance premium and the closing fee.
And then I have one other question, and this kind of ties into some legal stuff. So I'm not sure if you can totally answer it, if there's a right or wrong answer here. Yeah. If you have a buyer who is still married, but is separated, so they want to purchase their own property.
Yeah.
How does that property, again, this might be too into the legal aspect of things, but does that property also become the spouse's, or is it because they're separated? I don't know if that falls into title at all, or this may be more of a Tim question. I don't know.
He knows how to answer this question.
Yeah. This question because I have a client that reached out to me that's in this exact situation. So this is good.
No, he is the right guy to ask.
Nebraska is essentially, they're referred to as a marital interest state. So anytime you or your spouse owns a property, whether there's just one person on the deed, which the deed would be that who is the owner and who is the title holder, or whether both are on there, there's always, that spouse always has an interest in that property as long as they're married. So for your like situation, if they were buying their own separate property and they're still legally married, a lot of times we get this when, somebody's buying a house and they're going through a divorce and the divorce isn't finalized yet. So in legal eyes, they're still legally married. So that doesn't mean the spouse has to be on the deed or be on title in any way. So that person could purchase the property herself or himself and be the owner of it. But as long as they're still married, that spouse does have an interest in the property. So kind of to simplify that, if somebody were to ever sell a property and they were married, that spouse has to be on the deed to sign that to get rid of their marital interest. So on the buyer side, they can definitely buy a property themselves. However, what a lot of times the snag is with that is if they're financing the transaction, since Nebraska is their marital interest state, their lender makes them sign a deed of trust, which that is basically the security instrument that the bank files against the property that's going to place a lien on it. And so what the bank is going to require is that all interested parties in the property need to execute that lien document, which is the deed of trust. So that person could purchase the property as an individual. She can take title as an individual. It could be her property, title as herself or himself only. But if they're financing the transaction, all interested parties need to execute the lender's deed of trust, which that's where the snags come in which at closing, that spouse is going to be required to sign that document along with the purchaser.
But if it's a cash purchase,
yep, it's a cash.
It's just free and clear.
Yep. If it's a cash purchase, they would take title. So say if I was buying a property myself without my wife, I would purchase the property, Nate Jaeger, and my marital status on the deed would be a married person. Now, in the future, if I were ever to sell that property, even though my wife is not on title, I'm a married purpose. So when we sell, me and my wife both have to sign.
Right.
To sell.
Right.
Yeah.
No, I just have the situation where they've been separated for like 4 years, but they've already, the home that they own together, she remained in the home. Somehow they legally all split the home that they are currently in. So she is full owner of that home. He's off the deed.
Yeah.
So she's in the process of selling that on her own, but will be purchasing in Omaha with cash. So I just want to make sure that she's walking into this, purchasing this home, and that is going to be her home. And she's not going to get caught at some point 2 months down the road when they go through this. They haven't even gone to court yet. It's been like 4 years. So that when they go to court to kind of finalize this divorce, that she's not caught. So.
Right. So, if she can definitely buy that property herself on her own. There are no issues there. If she were ever to sell the property and that divorce, isn't finalized and technically they're still legally married, well, he would ultimately have to be a part of that transaction for the sale piece of it. There's kind of a difference too between like being legally divorced and somebody going through like a separation agreement, which is kind of a whole nother thing too. And I know you mentioned separation agreement, so I don't know if that's the case, but like people who get like separated.
I don't know if it's a legal separation through the court, because I know sometimes you have to have like a separation date, and other times you just separate. Yeah. And it's just kind of, you're just separated. There's no legal pathway. There's 2 ways to go about it, legal or not legal, so to speak. So I don't know what the understanding is with their separation. I do know she has an attorney working with her on her end because she's selling her house in another town. So it's a small town. So I know this attorney knows all the details. So I'm assuming she's probably already filled her in and let her know that this is okay. But I just wanted to make sure, again, that she's not walking into something where she goes to court to at some point get this divorce done or whatever. And holy shit, he's part owner of this house now or something.
Right. Well, and when you mention that the clients are working with an attorney, that gives you then a little bit of confidence that things are going to kind of be done correctly. If ever you guys get in a situation where, people are going through divorce or, say if somebody was like just recently passed away and they own the property. So those kind of complicated situations, if you guys ever run into that in which the clients say that they don't have attorneys involved or they're not getting legal help, those are kind of red flags a little bit. And a lot of times those lead to where, more issues can occur when we get down to buying, selling real estate. So if that were to ever happen, if you guys, perfect instance of call somebody here in our office, walk through your scenario, and we'll kind of answer questions, give you ideas, kind of make sense of things on kind of what the next steps will be. Okay, so one other thing that I want to talk about, like title insurance wise, where you probably get the most questions on, and this is part of the purchase agreement. So when you guys are doing purchase contracts, there's a section in there where it states that, the buyer has the options to choose title insurance. Typically that is preset that the buyer is going to purchase title insurance. And it gives you guys an option to mark whether the buyer wants an expanded policy or a basic policy. And so the one question that typically real estate agents would get is, okay, what's the difference between an expanded policy and a basic policy? So an expanded policy is used for people who are buying their primary home that they're living in. An expanded policy is not for people who are doing investment properties or secondary homes or purchasing company or property through their companies. This policy is designated for people who are buying their primary house, to live in as individuals. And so title insurance companies, they created the expanded policy. Basically, when people were buying real estate and they had stuff come up as part of a real estate transaction, the standard title insurance policy would not cover things that most commonly come up as kind of issues. So what title insurance companies did is they created this expanded policy that would be offered to people who are buying a primary house to protect their biggest investment they're making. It's not going to be an investment property, a secondary home. And so within that purchase agreement, you guys can choose, it's pretty much defaulted to the buyer choosing the expanded policy. But you can check the box if the buyers want a basic policy, they can check that to issue the basic policy. And with the expanded policy, I would always recommend to do that because the cost saving or the cost to it is actually not that much. I would say on a $300,000 purchase, the cost difference between a expanded and basic policy would be like $150. Typically, that title premium is split between the buyer and the seller. So the buyer's out-of-pocket expense for the difference in policy is like $75. So it's really not that much. What I think some of the best benefits of the expanded policy versus the basic policy is that, say, for example, the buyer doesn't obtain a survey prior to closing and they end up closing on the property. They later find out that there's encroachments, like the fence is not built on the property line, or maybe a shed is built over a lot line, or somehow the improvement of the house is built over a lot line. Even like landscaping stuff that's worth value is not within the boundaries of the property. So the expanded policy has a survey protection on that. So if the homeowner has a loss of having to remove shed, remove fence, remove landscaping, their title insurance policy would actually cover some of the cost to help fix that issue. Whereas the basic policy does not have that coverage. So that's kind of one thing that would happen quite a bit, in which why they wanted to put that expanded policy in place. The other thing with an expanded policy is that it has protections in regards to like covenants or restrictions of use on the property. So, somebody buys a property in a subdivision that has active covenants. Say, for example, the covenants say you can't own a shed. Well, let's say the property has a shed. The homeowners buy the property, they move in, a year later, the HOA is telling them, okay, you have to remove this shed because it's against our covenants. Well, an expanded title insurance policy would have some coverage for the homeowner because it's covering those kind of restrictions in which the basic policy would not. We actually had a Better Homes agent about a year ago. He had a client purchase a townhome, and right before closing, the seller put in like 3 or 4 new windows and closed on the property. The buyer moved in. The week they moved in, the neighbor came over and said, those windows aren't part or are approved with the covenants for our designated area. And so the HOA got involved and actually sent a letter and made the buyer replace those windows. Well, the agent involved was a very good agent. They came back to us and said, does title insurance cover that? And, we kind of walk them through, it looks like it would be kind of a covered claim. So the homeowner submitted their claim through their owner's policy, and the title insurance company, or the underwriter, basically covered the cost to replace the windows for the homeowner. So that's kind of an example there.
Those are great examples. Thank you, Nate. I always struggle with examples for expanded, and those were perfect. So
yeah. Expanded policy also has coverage for mechanics liens, whereas a basic policy doesn't. So let's say, for example, if the seller had some work completed prior to closing, they didn't pay a contractor, closing happens, that contractor comes in, puts a lien on the property, that title underwriter would actually help get that mechanics lien removed to clear up that cloud on title, whereas a basic policy, there wouldn't be any sort of coverage for that. And then like code violations or permit issues. So if somebody, say there's code violations on a property, that usually comes up. We find that kind of before, but let's say, for example, somebody adds on a deck, they didn't take out the necessary permits to do that. Somehow the city finds out about this new deck that was constructed, the proper permits weren't pulled. Now the new homeowner has to, redo the deck to get it to code. An expanded policy would be able to cover the costs of that as well that the homeowner would have. So there's a lot of things there with an expanded policy that there's protections for that a basic policy doesn't, and just the cost difference is pretty minimal, to be honest with you. So I always recommend having your clients do the expanded policy. Not only is it good for them, it also helps you guys out as agents as well. If there's issues that arise in the future, you can say, yeah, we purchased the expanded policy. That's what we recommended. Now there's some help to resolve whatever issues that may come up after that.
Do you have a, I actually have a flyer from Green Title that I actually put in my buyer's guide. Do you have a flyer that breaks those two down? Like just a basic, this is what basic covers and this is what expanded covers. Do you have something like that?
Yep. I have like 3 or 4 different flyers that I can send everybody.
Okay.
That you guys can have, and it goes through all of that stuff. And there's some other stuff too that's free information. Any other questions on that piece of it? Okay. The other thing I kind of wanted to discuss with you guys is just like common mistakes that I kind of see real estate agents make as purchase agreements come through, or kind of good practices that you guys can kind of put in place. So the main one is when you have buyers that you're working with and they're signing purchase agreements, there's a section towards the end of the purchase agreement that has the names for deed. And so that is an extremely important section, because any title company, we're going to follow what that purchase agreement states. So when those are being filled out, it's important to have that section done correctly. The best piece of advice that I can use is when you guys are working with buyers, make sure that you are getting their true legal name on that purchase agreement as they're signing it. So, I would take whatever their driver's license has and put that as the buyer and put that as their name on the contract. A lot of times agents are just using like a common name or a nickname that they usually go by. They're not verifying that. And so once the purchase agreement's signed,